When you look at what's happening within the energy landscape, stepping back to talk about why we're doing this, we look at what's happening within energy in the United States and specifically electricity. We're in the midst of a transition. There's some really interesting trends happening within electricity right now, one of which is that we are seeing for the first time in several decades increasing electricity demand. So for the first time ever, it's now economic to deploy energy generating assets at the load, which is to say at the real estate, at the property, at the place where electricity is consumed. Ultimately, my expectation over the next 5+ years in many jurisdictions is that we're going to see unprecedented levels of electricity cost increases.
Dave Riess joins me here today, and it's going to be a really exciting episode because we're going to be talking quite a bit about real estate investing and energy use and a few other things. I mean, there's some very strategic things that Dave has and his team has available to him. So you head over to WonderPower.com. I'm going to have that as a clickable link in the show notes because you got to use that letter U instead of an O when you do Wonder. WonderPower.com. I really appreciate your time here today, Dave.
Thanks for having me.
So let's start things off. How did you find your way into this?
Yeah, it's a bit of a circuitous path. As an undergrad, I studied electrical engineering, was really interested in energy and energy systems coming out of school, during this recession in 08, 09, and sort of stumbled my way into early stage technology startup companies in New York. Ended up doing some electrical engineering work, evolved as an engineer, ended up working on some software and had a path that led me ultimately to a place where I was doing software development for an advertising technology company. And it was sort of at that time that I realized that I really liked working on very difficult problems, but I also wanted to do something with more substance than helping Procter & Gamble sell more toothpaste on Facebook. And so that's when I kind of shifted gears and refocused my career on energy. One thing led to another. I was at the Lawrence Berkeley National Lab briefly, and it was at the lab that I discovered some really interesting trends happening within energy. And that's really set the foundation for what Wonder has become today. I'm happy to get into who we are and what we do, but that's kind of roughly the arc of the path that led me to focus on commercial solar.
Who are you and what do you do?
Yeah, absolutely. Wonder is 11 years old. We're based in Boulder, Colorado. We're about 45 people here in Boulder. We focus on helping commercial real estate owners capture NOI from the deployment of energy assets on premise. So primarily rooftop systems. We do some carports. Overwhelmingly, what we focus on is solar. And we deploy these solar systems. They generate power. We sell that power, that generates revenue, and that revenue helps us provide a lease payment to our landlords, which ultimately delivers additional NOI above and beyond the general space leases that are typical in the market. When you look at what's happening within the energy landscape, stepping back to talk about why we're doing this, we look at what's happening within energy in the United States and specifically electricity. We're in the midst of a transition. There's some really interesting trends happening within electricity right now, one of which is that we are seeing for the first time in several decades increasing electricity demand. And that might sound a little bit strange, but it is the case that through the late 90s and the early 2000s, electricity and broadly energy consumption in the United States was largely flat during that period, despite the ongoing GDP growth. And that has to do with the recomposition of our domestic economy around services and away from manufacturing and a few other trends. And, with fleet electrification, with reshoring of manufacturing, with climate, data centers, of course, were for the first time in several decades seeing increasing levels of electricity demand. And the grid is really not set up in a lot of jurisdictions to be able to supply that, which puts distributed generation in a really interesting position. So for the first time ever, it's now economic to deploy energy generating assets at the load, which is to say at the real estate, at the property, at the place where electricity is consumed. And that's, something that has become really, really important as we look forward to the next couple of decades and seek to deploy infrastructure that meets that supply and demand mismatch. So if you look at what's happening within electricity, solar and distributed generation is one of the main attractions. And if you look at what's happening within solar, there's basically three segments. There's residential, stuff on houses. There's utility scale, these giant things out in the desert. And then there's commercial. Commercial has long been this huge opportunity that's been unaddressed. And a lot of that has to do with some of the things that make it tricky to execute in that space. And so that's really what Wonder focuses on, delivering a really seamless experience to our commercial real estate owners and delivering on some nuanced projects and nuanced transactions in a way that creates real significant value for our property owners.
So what you're saying is that you'll identify a commercial building and then you lease the solar panels to the business owner to recoup some of that energy. How does that work?
Yeah, so there's a few ways, there's a few structures under which we transact. Our ultimate goal is to deliver value to commercial real estate owners in whatever way makes the most sense for them. Most often, what we're doing is we're engaging with the property owner, so the commercial real estate owner, and we are leasing their roof space from them for the
I
purposes of
see.
deploying energy assets. It's akin to what you might see from an ancillary revenue stream from a billboard or a cell tower or something along those lines, where we're deploying a piece of infrastructure on that building that creates value that ultimately yields a revenue stream in the form of a lease payment to the real estate owner. And so just to kind of connect those dots, we'll go in and lease a roof location, and then Wonder will provide all of the capital through a facility that we have in place with Blackstone to deploy the energy asset. Obviously, the amount of CapEx required for these things depends on the size of the asset. We do systems anywhere from $100,000 up towards 40 million. There's very small systems, very big systems. We do all sorts of different sizes. And once that system is built, then of course it generates electricity. And there are a few ways that we essentially monetize that electricity. We can sell that electricity to the tenant if that's appropriate. We can sell that electricity to a utility in certain circumstances. There are certain markets where we can sell that utility to consumers, like homeowners that are in the utility's jurisdiction, but are not obviously proximate necessarily to the commercial property that we're generating power on. And so there's a few ways that we monetize power, but in general, we try to insulate our commercial real estate owner from any risk associated with that revenue stream, and ultimately simply deliver to them a steady lease payment for 20 to 25 years.
Yeah, this is quite interesting. You mentioned data centers. I know that especially with AI and, well, prior to that, it was crypto mining at a smaller scale. Even though our population is kind of stagnant to a certain extent, our consumption continues to increase because AI is a great example. The power it takes to run these AI models are almost insurmountable, and they continue to grow.
That's right. It's astonishing the amount of power that those hyperscalers consume.
Yeah. So do you find that as a big piece of the trend right now, is those type of facilities?
So it's definitely a ranking factor in terms of things happening today that are putting upward pressure on electricity demand. We have deployed some on-premise energy assets, some on-premise solar systems on data centers. Even when we're deploying very, very large systems on data centers, it still tends to be a very small portion of their energy offset. And so I think the bigger factor is really the impact that increased electricity demand has on everybody else. It increases the level of energy scarcity that might exist. Ultimately, my expectation over the next 5+ years in many jurisdictions is that we're going to see unprecedented levels of electricity cost increases. And that's just basic supply and demand dynamics where we've got rapidly accelerating demand. Data centers is one of several drivers that's pushing upward on demand. And supply is basically fixed. There are new centralized generators coming online, but the rate at which they're coming online is inconsequential relative to the rate at which demand is accelerating. And so, utilities, in terms of the standard model where you build a $50 or $100 million gas-fired centralized generation facility, that's not a viable strategy for addressing that supply and demand balance over the next 5 to 10 years. Those things take a decade to build in a lot of cases, and there's real scarcity of that equipment. There's not a lot of elasticity there. And so I think there's going to be a lot more as we see electricity prices increase. There's going to be a lot more motivation coming from tenants, coming from property owners to basically install, the way that I think about it is as a physical hedge against electricity rate escalation. A lot of cases we can offset 90+% of a building's load, and we can do so in a way that provides certainty around the cost of that power to whomever is responsible for paying that power. And so whether that's an owner operator who occupies a building that they own, or it's a landlord who's leasing that space to a tenant, there's a lot of different places. Anybody who's exposed to that sort of electricity risk is generally motivated to manage that risk over the coming years. And some people are going to wait till it's pretty late in the game and are going to pay the price for doing that. And I think some people who are a little bit earlier to the party are going to benefit from having that hedge in place sooner rather than later.
So can you describe your ideal landlord then, and like who you're working with, and maybe even the regions of the country that seem to be the best fit for you?
Yeah. So I'll start with the regions. We do a lot of work in the Northeast. We do a lot of work in Illinois. We do a lot of work in California. There's a few other spots around the country where we're active, but the Northeastern seaboard is probably the primary place where we're focused. I think when people think about solar, a lot of times their attention goes to the Southwest, Arizona, New Mexico. And what's interesting is that the amount of sunlight that New Mexico gets relative to, say, Massachusetts, it varies on, it's around a 30% difference, roughly speaking. However, the cost of power is much more significant. The cost of power in New Mexico is very low. There's a lot of access to coal power in New Mexico. Cost of power in Massachusetts, for example, is rather high. It's above the national average. And the delta there is more like a 4 to 5x. What drives sort of where geographically where it makes sense to deploy these systems is really the economics of the energy, because ultimately the amount of value that we can create for a landlord is a function of how valuable the electricity is. In a market like the Southwest that has a lot of sunlight, that electricity that our system generates is just not as valuable as that same electricity in the Northeast. And so even if the same system, same cost generates a little bit less power in the Northeast, the value of that power is going to overwhelm that equation. And so that's why kind of things break the way they do. In terms of our ideal customers, we tend to focus on kind of mid to high scale commercial real estate owners. So most of our customers have portfolios that are in the zip code of kind of 50 properties up to, several hundred or several thousand properties, very large scale firms, asset managers, that sort of thing. And we're really looking to do is build programmatic relationships that enable us to help these commercial real estate owners address large swaths of their portfolio. So it's very easy to look at a 500 property portfolio and pick out the 2 or 3 most economically attractive opportunities and address those. What we think is much more interesting is to build a holistic strategy that allows our commercial real estate owners to get to 30, 40, 50% penetration into their portfolio. That aggregate NOI number is just a much bigger number than even the 3 most lucrative properties in that portfolio. And so that's who we tend to focus on. From a property archetype standpoint, it's everything that's not residential. It is basically in scope. We do everything from, we do a lot of logistics, a lot of warehousing. We do a lot of self-storage. We do a fair bit in senior living, medical office. There's a bunch of different verticals in that space that we have different strategies for, but we are overwhelmingly focused on commercial. The one sort of brachy water in there is multifamily. Multifamily tends to be tricky just from sort of an addressability standpoint, but we've done a number of multifamily projects as well.
Mm-hmm. It's just one of those things that, I'm gonna be probably an outlier on this. We have some solar in the fields in my neck of the woods, and to be honest, they're a bit of an eyesore. Sticking them on top of a building that you're not going to see, it just seems like it's unused space typically, and it's just a good spot for it.
That's exactly right. Yeah, I mean, there's really not a lot of use for that space otherwise. And then, from an implementation standpoint, if you're building a large solar installation in a field, you have to deal with the same types of things you have to deal with in ground up real estate development. You have to deal with environmental and grading. Once you get the land prepped, the install can be a little bit lower cost, but in a lot of cases, it makes a lot more sense to be deploying on a rooftop. The other thing that's really important, I think, to recognize is that when we deploy on a rooftop, the energy is more valuable in general. And that's because we're basically competing with power at the plug. And so the composition of the cost of power that comes out of the outlet is really the cost of that power itself, and then the transmission and distribution necessary to get it from that centralized generator that the utility operates all the way to the outlet. And that's a lot of cost there. There's a lot of markets where that's 60% of the cost of an electron is the transmission and distribution of that electron to the load. And so when we deploy on a property, we get to compete at that plug, which means that power is more valuable, which of course, in turn, means we can generate more NOI for our property owners.
Just to remind everybody, head over to WonderPower.com to learn more about what we're talking about here. If you found some value in what we're talking about so far, do us a quick favor. Share this with one of your investor friends. If you're watching us on YouTube, give us a quick like and subscribe. So, Dave, one of the things I wanted to tackle is you've helped build this company now to, you mentioned 45 people, you have a relationship with Blackstone. What have been some of the biggest struggles along the way?
For us, We have one of the things that makes Wonder really interesting, I think, is that our thesis has been really stable throughout the entire existence of the business. So, we founded the company in 2014, and really the observation that we had that was sort of the basis for starting the company was really that there's this massive addressable market within the commercial segment of solar. So, to say things in kind of dollar denominated terms, we have about, it's a little bit less than maybe $1 trillion of energy infrastructure that can be deployed on premise, so on rooftops in commercial settings across the country. And on average, we tend to do something in the zone of about $3 billion of CapEx a year as a country, as a whole. And so, that either means that it's going to take us hundreds of years to address the untapped potential in this market, or something's going to change, or some set of factors are going to change such that the growth rate accelerates. And so Wonder has always been oriented around trying to deliver growth to this market. And, when we started, the company looked very different. We started as a financier, and the observation was that the overwhelming majority of opportunities in that tilde trillion dollars of CapEx are sub-$1 million investments. And those sub-$1 million investments at that time were difficult to underwrite. They were sort of transactionally cost prohibitive for the types of capital and the types of developers that were pursuing those transactions. And so we thought at that time, if we could bring more fluid financing into that market, there would naturally be a lot of actors who would flock to start to develop assets in that space, and we would therefore catalyze growth. We developed an innovative underwriting model, built a lot of deep financial relationships with infrastructure investors who wanted to deploy capital into the segment, and built up a scale lending business that was one of the largest lending businesses in the segment, did about $500 million of financing in the space, but still didn't see the level of growth that we wanted to see. About 4 or 5 years ago, that we started to essentially vertically integrate and shift away from financing other people's projects to simply originating our own projects and then financing those projects. So fast forward to today, we still do financing. However, we don't finance any third projects. We only finance Wonder originated projects. And so that's a pretty significant evolution. And I think one of the major challenges that we've had over the last decade is really just the number of pieces that we need to put together to really make this work and make this work cost effectively. And I think one of the things that's really enabled us to be as successful as we have been is really we put our customer at the center of everything that we do. We really are grounded in the fact that you can say whatever you want to say about the rate at which commercial solar is growing within the United States. Well, growth is impeded by jurisdictional variability or federal regulatory uncertainty or permitting or equipment availability. There's all sorts of things you can point to that represent challenges to deploying energy assets in this market. But ultimately, the real thing that determines growth is the type of product that we're delivering to commercial real estate owners. And if we're delivering a product to commercial real estate owners that commercial real estate owners are excited to say yes to, that's ultimately where growth follows from. And so by really focusing on our customer experience, really focusing on insulating our customers from the sausage making, really focusing on delivering a high quality experience, under promising, over delivering, working very hard not to retrade our customers on our initial terms. These are things that we're doing to really try to deliver for this market. And what that leads to is a really, really high repeat rate of business. And that's ultimately where a lot of our growth comes from.
You mentioned you started in 2014. I would imagine the technology has changed drastically in 10 years' time.
So that's one of the things that's fascinating about this market is that it's changed from a technical standpoint very little. What's changed over that time period is cost. So cost of the equipment has come down pretty materially over the last decade. And that's obviously a tailwind for customer value that opens up new markets. We used to have to be sort of above the national average from an energy cost standpoint in order to justify ROI on these projects. Today, if we're sort of pretty close to the national average from a commercial cost of power standpoint, we're able to generate consequential value for our landlords. The biggest thing that's really changed has been price. And that's pretty central to our thesis, which is that these assets are pretty simple. They're pretty straightforward. It's kind of set it and forget it. And the technology that we're using is not bleeding edge technology. It's been around for decades. And so that means that we know how to model it. We know what kind of production we can expect over the next 2 decades. We have a pretty high degree of certainty for how these assets are going to perform. And that's ultimately providing that continuity and that certainty is something that's really important for commercial real estate, which is typically not a market that takes on a whole lot of risk. And so I think we need to be clear about the fact that when we go in with a value proposition, we need to make sure that we're delivering a product that doesn't introduce meaningful amounts of risk to the underlying real estate thesis. Because at the end of the day, commercial real estate is kind of the core business of our customers. And this renewable energy asset is oftentimes nice to have. It's creative. It adds NOI. It maybe has some benefit to the tenant or makes the building more attractive from a lease up standpoint. But it's not like the building's going to fall down if it doesn't have solar on top.
You mentioned that the NOI has changed because the cost of this product has dropped quite a bit since its inception. Could you talk a little bit about government subsidies? How does that impact what you do? And is that still even in play? And what does the future look on that?
Yeah. So a lot of activity there recently. So over the last, I guess, few weeks, month, we've got one big beautiful bill. And basically what that does is it pulls back on the federal subsidies for investment in renewable energy. And that directly affects, our market and what we do. The federal subsidy right now there's some nuance to it, but in general provides a 30% incentive, which is to say that there's a tax credit that you can get as a byproduct of essentially investing in these renewable energy assets. As I said, based on that kind of deal structure that we talked about, where we're providing lease revenue to our landlords, in most contexts, we're monetizing that incentive and the value from that incentive because it basically flows into that lease payment. The market was thrown into a bit of a state of shock when One Big Beautiful Bill was passed and proposed to roll back those incentives. Personally, I think it's a good thing. I think those federal incentives create a lot of market distortions. I think it's important to be clear about the fact that the removal of the 30% incentive is going to have an impact on the market. It's going to put sort of downward pressure on lease payments, once that takes effect. But with that said, I think over the long term, it will lead to a healthier, more resilient overall market. I think the fact of the matter is that the subsidy really isn't a full 30% because there's a lot of that 30% value because of how complex it is. A lot of that flows to lawyers and financial structuring. A lot of that flows to tax investors who extract really high rates of return for their pretty scarce capital. There's a lot of ancillary sort of costs that are layered on to compliance, audit, these sorts of things. So at the end of the day, it maybe nets out to, I don't know, you probably get a lot of debate about where this number is, but it's somewhere in the zone of probably realistically 10 to 20% actual incentive. So, that incentive falling away is going to have a little bit of a cooling effect on the market. But broadly, I think over a little bit of a longer time horizon, call it a 24 to 36 month time horizon, I think it's going to give rise to a more resilient and more robust market. So I'm basically supportive of that change. Property owners should be aware that there's a pretty rapidly closing window of time where we can still contract new projects and basically get them in under that legacy incentive. And there is an economic motivation to do that. If we were to offer a lease now versus in 6 months, that number is going to be pretty different because of the absence of that incentive in 6 months. So, the wind down of it is a little bit nuanced, but basically it's more or less, you can consider it gone by July 4th, 2026 is kind of a simplistic way to think about it. And so really getting project contracted and under construction before that is pretty critical to making sure that we preserve that incentive. But even on the back end of that, there's still going to be business to be done. There'll be a little bit of a recalibration phase.
A lot of people that are listening are, there's people that own properties from single family homes to multifamily real estate and storage units and everything in between. Could you give everybody one thing, like if they could start on one thing that would have a significant return on investment that they implemented today, what would that be? Where would you suggest some people start?
Yeah, I mean, I think maybe kind of dovetailing with that last thread in terms of the wind down of the federal incentives, I think probably where I'd point people is that if there are places in your portfolio where the cost of power is north of 10, 12, 14 cents a kilowatt hour, those are places where you should at least evaluate deploying solar. I think, if you were to not do that now, the time horizon under which you might want to revisit it is probably another 3 to 4 years. But the reason you're going to be revisiting it is because energy costs are going to be materially higher than they are today. And so those numbers, that kind of 10 to 14 cent range, is sort of a rough proxy for kind of the zone where commercial solar starts to make a lot of sense. Plenty of places where it'll make sense at lower rates than that. There are definitely plenty of places in the country where rates are much higher than that, in California and the Northeast. And so for residential, I'm a little bit less calibrated on residential specifically, but I would imagine, add a few cents to that. So maybe it's 14 to 18 cents or something like that is the threshold. As you scale the systems down to a residential size, just some of the fixed costs start to add up a little bit more. And so on a per unit energy basis, those systems are a little bit less cost effective, but that's just a function of their scale. And so, I think that's probably the thing to look into during this wind down phase. I think for residential solar, the time is definitely of the essence, but it's probably a good time to go in and reevaluate the portfolio, make a deliberate decision, and, ultimately decide to get on the train or get off the train now. Like I said, I don't think, it's sort of in a sense, it's a reversible decision insofar as if you don't do it now, you can always wait for those electricity rates to rise to justify that cost. But of course, then you or your tenants are paying that cost in the interim.
Yeah. And then when you wait till the end like that, then there's a land rush and now you're going to be paying a premium.
Yeah.
With the installations that you have, like what type of maintenance do you have to do with them? You mentioned being in the Northeast. I would imagine you're dealing with snow and a few other things.
Yeah. So that's, again, one of the things that's really powerful about these systems is that they're very low maintenance. So for our systems, we do an annual preventative maintenance inspection, and that's about it. There's context where we do need to go in and wash the panels to clean off debris and dirt and that sort of thing. That tends to happen in places where we've got a lot of construction activity happening. So occasionally we'll, build a system on a property that's surrounded by some development. And in that context, that development is kicking up a lot of dust, and we'll need to maybe wash those modules 1 or 2 times a year. But in general, if these things are built properly, they generally should be pretty stable for several decades. There's a little bit of maintenance that happens at the 10-year mark or thereabouts. Overwhelmingly, these things are pretty static. It's not as though we have regular monthly visits or anything like that. It's once a year that we're out on site. As far as snow goes, we model that in. And so we don't do snow removal. It's just not cost effective for us to do that. We model in depressed levels of production during the winter because of snow coverage. And that's part of our assumption. And so, that weather variability is something that you just have to be able to model economically. But, getting somebody up on the roof to clear snow is generally more expensive and more risky than just letting it melt off.
Yeah. Now that I think about it, I suppose being up on a building that probably reduces maintenance too, versus being out in the desert or in a field somewhere.
That's exactly right. It tends to be a little bit of a cleaner environment. A multi-tenant retail, if we've got, a restaurant or something like that, we got to be careful of, grease vents and exhaust and that sort of thing. But we generally engineer around those sorts of things. In general, it's a pretty nice environment for these systems.
Well, Dave, this has been a very interesting conversation. Is there anything we should have tried to hit on?
I mean, I think we covered the big topics. I think, time is of the essence to capture those waning federal incentives. Like I said, opportunity will be around. So I think it's definitely something people should be looking into, regardless of what your views on climate are. The fact of the matter is that you can turn photons into dollars. It's an intelligent thing to do in a lot of contexts if you want to expand the NOI generation potential of your properties.
Well, if you're ready, Dave, we'll jump into the rapid fire. But if you're ready, we'll jump in and close out this episode.
Sounds good.
What lie do entrepreneurs often tell themselves?
There's this thing that we talk about, at least in my universe, called product market fit. And so I think a lot of people lie to themselves about when they've got product market fit. And it's important to be very clear-eyed about when the product you're delivering to the market is actually resonating with your customer.
If you could go back in time and give your younger self a piece of advice, what would it be?
Details, details, details. Just getting into the details is really what makes our business work. I think makes a lot of businesses work. So, I learn something new every time I get on a rooftop. I would have gotten on more rooftops sooner.
Do you have a book recommendation?
Lots of one of the books that I find sort of most consistently thought-provoking is The Innovator's Dilemma by Clay Christensen. It's kind of an academic justification explanation for technology-based disruption patterns. I find it very interesting. And in particular, I find it interesting because of some of the ways in which I think it does not apply to energy, but very thought-provoking frame of reference for thinking about how technology evolves.
What single process or tool have you implemented that has had the biggest time-saving impact?
Well, that would definitely be Astra. So Astra is a piece of software that we've been developing here internally for the better part of a decade. And it's really what runs our project development process. And that's ultimately how we're able to deliver cost effectively for our customers and maximize the amount of value that we create for them.
Well, Dave, this has just been fantastic. Again, it is wonderpower.com. That's going to be a clickable link in the show notes. Again, it is WUNDER. Really appreciate your time. I hope you'll consider coming back again sometime.
Yeah, I would love to. Thanks for having me.